Welcome. You're viewing the video version of the Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure market breadth summary chart for February 28, 2016. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 0.91 rose from 0.74 last week and is now in mildly bearish territory. The total count of securities in bullish or bearish patterns rose 4% to 2,954. The count of bearish stocks decreased 5%, while the count of stocks in bullish patterns increased 16%. The Pirls P&F Market Breadth Summary Chart shows us a market now 38 consecutive weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the email version of the Pirls Stock Market Commentary free of charge, simply enter your email address in the space provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 280 points for the 16th advance in 26 weeks. At a negative 552.66 points, it continues below all 7 tops above plus 100, has risen above the October 2014 bottom, and continues below the last 3 remaining bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 4 accumulation days and 0 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. At Wednesday 2/24 close, the CCI 20 daily had 6 consecutive days above zero for a change in Woody's trend to up. The next day, Thursday 2/25, it formed a zero-line reject long entry signal within the plus or minus 50 range. We will follow the results of this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 2 weeks ago, while the daily CCI 20 began a Woody's downtrend this past week. The CCI 20 weekly continues in a Woody's trend to down. It rose last week to a negative 74.83 outside the plus or minus 50 range for a valid zero-line reject short entry signal. Industry rotation the last 2 weeks. All of the top 5 and bottom 5 industries are positive. Bullish, networkers now leads the top 5. Semis continues in the top 5. Computer hardware and disk drives have entered the top 5. Gold and silver has left the top 5 and entered the bottom 5. Bearish, KBW Bank continues in the bottom 5. S&P Retail has left the top 5. Focus this week from www.zerohedge.com. Trump must be stopped, plead The Economist and CFR as financial establishment panics. The highlights of the article following are, in effect, a strong case that the financial establishment control of American politics may be crumbling. When such stalwart titans of financial establishmentarianism as the Council of Foreign Relations and The Economist, who until now had been largely ignoring Trump's ascent in the political hierarchy, finally unleash an all-out assault and go after Trump on the very same day, you know that the flamboyant, hyperbolic billionaire has finally gotten on the nerves of some very high net worth individuals. Just in case there was any confusion what The Economist thinks, if the field remains split as it is now, it is possible for Mr. Trump to win with just a plurality of votes. To prevent that, others must drop out. Although we are yet to be convinced by Mr. Rubio, he stands a better chance of beating Mr. Trump than anyone else. All the other candidates, including Mr. Cruz, who wrongly sees himself as the likeliest challenger, should get out of his way. If they decline to do so, it could soon be too late to prevent the party of Abraham Lincoln from being led into a presidential election by Donald Trump. And then there is the Council of Foreign Relations Ben style with selling America short, of which sections have been excerpted below. His policies would not make America great, just the opposite. A Trump presidency would represent the death knell of America as a great power. So, just whose nerves has Trump gotten on? Here below is a partial summary of the current and honorary directors of the CFR, who basically doubled down as a who is who list of everyone relevant in modern finance. Robert E. Rubin, David M. Rubenstein, Alan S. Blinder, Blair Efron, Lawrence D. Fink, Stephen Friedman, Timothy F. Geithner, Madeleine K. Albright, Maurice R. Greenberg, Peter G. Peterson, David Rockefeller, and here below is one of the trustees and the board of The Economist, Lady Lynn Forrester de Rothschild. Thank you for tuning in for this week's Sand to Pirls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a productive and prosperous week coming up, and wishing you true success.